Good morning, trading world. It is September 15, 2022, 8:15 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the SPY. Earlier this week, I touched on the huge gamma risk building up for Friday's trading session. The more and more that we continue to circle back through this range, the bigger and bigger the gamma risks continue to grow. One of the strategies I employ a lot is selling naked premium. And in doing this, I have to be careful not to tie up too much capital or risk in an area. When selling naked premium, the name of the game is building up a big inventory of positions. However, it wouldn't do my account any good if I put on all those positions on with the same range or basket of risk. Everyone has heard of the saying, don't put all your eggs in one basket. Well, if we adapted that saying for trading, it would be, don't put all your positions in the same basket of risk. This can be done by volatility percentile or price ranges. But for the sake of easy explanation, let's go with price ranges. Alright, on the chart, we're looking at a 4-hour, I think this is, well, there's no need to think, 90-day 4-hour chart. Now, in allocating for naked premium or whatever your strategy is, let's say that my goal was to put on 10 positions. And we're going to use the last few days as an example. If I'm putting on positions and we came into the channel here, these are both major and minor channels, but just for the sake of argument right now, we're going to say these are all major channels. So what I would be looking to do, I would put 2 positions on here at the edge of entering this channel. And then we would go all the way up. I might even get 2 on in the middle of the channel. And then as we get up here closer to the edge of the top of the channel, I will put another 2 positions on. And then bam, we have the dropout and the threatened back down deep into the channel. Into the channel below is where I would put on another 2 positions. So on the other hand, if you allocate all of your funds at one time into the same channel range, all it takes is one break the wrong way to destroy your account, which I'm pretty sure a lot of people, looking at Reddit, I saw a lot of people complain about losing it all with this one break. I know everyone does not sell naked premium. However, this allocation strategy works to limit risk no matter what your option strategy is. Now, coming into Friday, looking at open interest, gamma could take us a long ways. Let me bring that up. Alright, this is Friday's expiration, which is a triple wishing day, which means there are 3 different expirations expiring on Friday. This leaves us with a lot of gamma risk, which makes us very much capable of a big move on Friday. And we can look at the open interest to kind of gain some insight on that gamma risk. And as you can look at here, look at the open interest. So coming into Friday, gamma risk could take us above 410 on the upside. You see all that open interest there? And then it could take us below 380 when you see all the open interest here. And the surprising thing is that people continue allocating money until they are positioned to the max, not realizing the huge ball of risk they have trapped themselves in. This goes back to standard deviations. I know I talk about this every so often, and a lot of people may not understand standard deviations, but if you look at the bell curve, this right here is a bell curve. 68.2% of all transactions happen in this area, and there is no advantage trading in that area, bullish or bearish. It doesn't matter. But if you were somehow able to take the bell curve and turn it on its side in relation to the price, let me get my drawing tools going. Alright, excuse the freehand drawing, but this is supposed to be the bell curve. And if you understand standard deviations, you know that 68.2% of all transactions are going to take place in this area. There is no statistical advantage for trading in this area. However, once we get outside of that standard deviation and you want to take a trade bearish back down toward the mean, or even outside here and bullish back toward the mean, there is a huge statistical advantage for trading outside that standard deviation. But right now, people are just building and building, kind of just building and building and building more trade in this area. And at some point, we're going to break out. And all this trade in here, once we break out, most of them have no statistical advantage. And we're going to get a lot of people saying they lost large amounts because they continue to allocate in this area where there is no statistical advantage. So that's pretty much all I wanted to kind of bring to light, because I know I talk about standard deviations. It's been a long time since I've actually went into standard deviation, even though I say it a lot. But wanted to kind of make you aware of what's going on and how this gamma risk is building. Now that that's out of the way, let's get to the key levels to watch for the day. All right, here we are back with the key levels of the day. Starting on the resistance side, we have our jack resistance at 395 to the 396 area. We have our queen resistance, 397 to the 399 area. Then we have our king resistance, 401 to the 404 area. On the support side, we have our jack support, 393 to the 392 area. We have queen support, 391 to the 390 area. And then king support, 389 to the 388 area. One thing I do want to mention, as I do believe that we are going to get a scare at some point in time today, but more so overnight, that if we break this 389 or this king support level, breaking below this 387, because we are already outside the weekly market maker's expected move, this leaves us very vulnerable to kind of enter into a black hole all the way down to 379, we'll say 380, $379 area. And if you notice, this is the next major channel. So we have to be very careful of that. Now, the main thesis for today is bullish, closing above 394.6 with a projected target high between 394 and 403. Now, alternate thesis is bearish, closing below 394.60 with a projected target lower between 393 and 388. The current major channel we are in is 397 all the way down to 379. The major channel below is 379 down to 364. If you notice, nothing has changed from yesterday as far as levels. However, as far as imbalance, we have a draw both way above and way below. And today, moreover, in the overnight session, we get a big scare as far as breaking the lower parts of the range. So be careful. Again, I'm reiterating this because it's very important that you understand the risk going in today's session through overnight into Friday's session. And with that, let's bring up the scenarios of the day. All right, our first and most probable scenario is going to be our expansive range day structure. We can have an initial drop down, find support, and chop back and forth to higher from there until later in the day where we may start to reverse. And this is going to lead us into that scare that's possibly pending overnight. But remember, the scare is testing this 388 and below. Another thing that I want to point out is that we are pretty much outside of the market maker's expected move for the week. And because of that, if we start to sell and sell off hard, professional money managers will have no choice but to sell S&P futures into the selling, making the drop faster and even more violent. This is dynamic hedging. So we have to be on guard of that. Let's get to the next scenario. Our next scenario is going to be our trend day down day type structure. We can open gap down, start with a pop back up toward the previous close represented by the blue line, and then find resistance on or before that previous close. We then enter a phase known as our golden window, which is going to be the best time to trade. It's where we enter the downtrend for the day. And then we get to our midday chop somewhere around either our possible queen or king support area. We start the second half of the day usually with a head fake, looking to continue the trend, the strong trend of the morning. And then at some point, we're going to start a rally toward the close. Doesn't happen all the time, but today is more favorable for that rally into the close if we do get a downtrend day. Also, I want to be aware of a vice versa alert for today. The vice versa alert is it's pretty much the opposite of the trend day down, which would be our trend day up. If for some reason we get a nice move before the opening that pushes us up and causes us to open in a position of gap up, then the exact opposite will happen. We'll have a fade back toward the previous close represented by the blue line, and then we'll enter into our golden window or dominant trend of the day, which will be up. Find our midday chop either around our possible queen or king resistance area, and then give a head fake the second half of the day to start, looking to continue that dominant trend, but then get a fade going into the close. So that's the vice versa alert on our trend day structure for today. Alright, our last scenario is going to be our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area and find midday chop around either the queen or king support before spending the same energy we use going down to go back up the second half of the day. Also, on this rounded reversal day type structure, we do have a vice versa alert because we could push a lot higher before the open. And if we do push higher, that leaves us open to that vice versa alert where we could continue higher after the cash open, and that would give us our midday chop either around our possible queen or king resistance area. We find that midday chop there, and then the second half of the day we would probably come down with the same amount of force that we went up with the first part of the day. So that's the vice versa alert on our rounded reversal day type structure. Also, we want to be aware the midday chop zones today could be really weird. It's a possibility. For example, the midday chop could see trade drop out because this is where there are less traders. The dominant trend is down right now, so the algos could kind of hijack trade during that time, and we could see some kind of weird move on the rounded reversal day type structure like this, where we come down and we're at that support area. We could see a further drop like that. So we want to be aware of that as well, because right now it is really key to notice volume and how it plays during trade. So anytime you see pops or rallies and volume begins to trail off, just know that this is short covering or algos hijacking trade, and that we could reverse lower at any moment. So again, as I preach every day, your most important job as a trader is to protect the capital that you already have. And we do that by knowing and understanding risk, and by managing that risk in accordance to our account size. I hope this helps. As always, have a positive trading day. I hope it's a great one.